As if the global picture was not grim enough, the negative sentiment has well and truly hit Australia, and cracks are appearing in what has until now been a pretty resilient economy. To get his take on things, I spoke to one of the nation's canniest and most experienced and wealthiest investors, Rob Millner, who runs a broad range of companies and billions of dollars in assets. Rob Millner, your results came out this week. Now, you've got companies in construction, retail, telecommunications, in industrial, as well as coal. What do their results tell you about the state of the economy in Australia at the moment?
Well, if I start with on the coal side, which is an exporting business, obviously the high Australian dollar has had an impact on us. We also had experienced higher transport costs, fuel going up, labour costs.
And you would have been affected by the floods in Queensland?
Oh yes, devastated by the floods. As you mentioned, this is our results week, and 6 months ago when I was talking to the analysts at our presentations, we thought our rail line was going to be out for 4 or 5 months, but fortunately it came back in 11 weeks. So that resulted in a lower operating profit this year for us.
So what about the sort of the Australian economy in construction and retail in particular? How are you seeing that?
Well, obviously through the building side of the business with brickworks, it is struggling at the moment. Queensland is probably our worst state. I don't know whether many people realise this, but there are actually people leaving Queensland. A few years ago, people were migrating north to Queensland from the southern states, but they're actually leaving now. It is cheaper to own a house and land in Victoria than it is in Queensland.
So are they going to Victoria?
Yes, most of them, and also there are more jobs in Victoria. On the retail side, through API, which owns the Priceline chain of pharmacies, it is affected, of course, like most retailers. It's struggling. And when I go around my factories and talking to the guys that work in the factories, they are struggling.
Statistics tell us the economy is going pretty well. The unemployment's low, the economy is strong. So doesn't that gel with you?
Well, not in the businesses we're in. We're in the business of retrenching people at the moment in brickworks, trying to reduce our costs because
you're laying people off.
Yeah, our profits are falling.
And what about in retail? Profits falling, going up?
No, we're holding our own, but the margins are being chewed away. But it is hard out there. You know, there's probably too much retail, and people haven't got the disposable income to spend.
I guess your main expertise is as an investor. You've been kicking around the markets for a very long time. Obviously, these are unusual and interesting times that we're living through. What's your positioning now? Are you buying, selling, or sitting pat?
We did do a bit of buying when the market had that big fallout a few weeks ago. And I noticed on my screen today, Westpac, for example, has a PE ratio of 7 and a fully franked dividend yield of 8%. So I don't know how long since ago that's happened, probably, 20 or 30 years ago in the early 90s.
So does that mean you're buying Westpac?
Well, I think it'd be hard to refuse at that price. But there's no doubt, there's not a lot of confidence around. And I talked to quite a few financial advisors, and a lot of their clients are actually taking some money out of the stock market and putting it in cash where they can get 6% and they feel safe with it.
And how do you reflect on the situation that the world is in at the moment, in Europe and America and Australia for that matter? But what's your view about how long that's going to go for, and what the outcome is going to be?
Well, there's a lot of uncertainty out there, and every morning and every evening when we turn on the news, there's something that's either Greece or it's Spain or it's Italy or it's the banks in France. It seems to be a never-ending story. Then we continue to have uncertainty in America. Some people think that America may be at the bottom. I'm not too sure about that. And then we come home to Australia. We've got the government that's very unstable, making a lot of decisions on the run, and there's not a lot of confidence in Australia for people to invest.
I suppose, the thing is, over the years, you would have found that the time to buy was when everyone was despondent.
Right. Yeah.
Do you think that we're at that time now, or that it may be some time in front of us?
Well, I would have to think, as I mentioned with those multiples I just spoke about with Westpac, there's some pretty good buys starting to appear in the market, but who knows, in another month, would you buy Westpac another $1 cheaper? I don't know. It's very difficult for people to always pick the top of the market and the bottom of the market, but you would have to think that you're somewhere getting down near the bottom somewhere.
And what's your view about the carbon tax?
I'm not very keen on this carbon tax. It's going to really affect some of our businesses. the brick business it's going to really affect. It's not going to help us on the coal side of things. And I think where a lot of people haven't realised where it's going to hurt and damage people is the average person in 2, 3 and 5 years' time will be decimated by this tax. It goes up 2.5% every year. The government can't compensate lower income workers to that extent. You mark my words, in 5 or 6 years, if this tax comes in, there'll be blood in the streets in some of this.
One of the companies that's affected, obviously, is coal miners,
yes.
And you've got New Hope,
yes.
Which is, I think, in the process of, or will soon be, Australia's largest independent colliery,
yes.
After Coal and Allied's been taken over by Rio Tinto. So what's your long-term positioning with New Hope, given everything that's going on? Is it for sale? Would you want to hang on to it or what?
Well, New Hope's in a very fortunate position. We're sitting on about $1.5 billion in cash. We're producing 6 million tonnes of coal at the moment, and we have plans and the money to develop somewhere between 12 and 15 million tonne of coal in the next 3 to 5 years. So we're still very positive on coal going forward.
Any prospective buyers of the business? Anyone coming out, knocking on your door saying they want to buy? Obviously there's been a lot of activity
yes.
in the sector.
Yeah, as you mentioned, there's not many of us left standing. So
are there people interested in buying New Hope?
We've had a few people knocking on our door, but at this stage we're happy where we are.
And finally, you're obviously an investor in the telecommunications industry through TPG. What's your view of the NBN and what that's going to bring to that sector?
At this stage, we don't think we're greatly affected by that. We're the lowest cost producer. We own our own networks. We're still attracting subscribers. We increased our subscribers in the last half. So we're still reasonably confident we can go with the NBN ahead of us and make some good profits. And
no concerns that Telstra will be able to use the NBN and the cash flow that it's getting there to compete more effectively?
Well, I think that's still a bit of an unknown, but we'll be by far the lowest cost competitor. So when you're the lowest cost competitor, you're in a pretty good position.
It's great talking to you, Rob Millner. Thanks very much.
Thanks, Alan.